Let's go straight to Chris Conway, though. He joins us from Australian Stock Report live out of our Melbourne studio. We are waiting for this debate, of course, to kick off. But, Chris, talk us through markets so far today, because we're off the lows, of course, but just up 6 points. It's pretty tepid.
Very tepid this afternoon, Ingrid, and I think it's a microcosm of, what we've been seeing from the market of late. Everyone today, of course, as you rightly say, waiting for the kick-off of the US presidential debate, the third and final one. And then, of course, everyone sort of looking a little bit further out, waiting for the outcome of the election itself, and, of course, what impact that might have on what the Fed does or doesn't do in December. So, yeah, we're really just in a holding pattern at the moment, both, in today's session and probably more broadly, waiting for some of these, key US macro events to drop, I guess you'd say.
I mean, interesting when you speak about the US, we've also got US reporting season taking place. What are you taking out of that, and anything you can sort of correlate with our market?
Look, it has been a pleasant surprise thus far in the US reporting season. We need to be mindful, of course, of the fact that only about 12% of US companies have reported, so it's not a significant as such sample size. The results have beaten expectations thus far, however, and one of the sectors that has beaten consistently is the banks. I think 7 US banks have reported thus far, and all 7, so 100% strike rate, have beaten expectations. So it could be that earnings decline is over in the US. We know it's, I think, about 4 or 5 quarters now where earnings have been declining. Again, early days, but the signs are encouraging. And hopefully, yeah, that will flow through to our market again, sort of reiterating that our market is sideways in a holding pattern. It's traded in a fairly tight range, about 110 points for the last 3 weeks, and probably needs a catalyst to break higher. So if we do get continued good results in the US, maybe that can flow through to our market.
All right, want to switch on to some production reports. We've got a bunch out this week. In fact, today in particular is a big one for the mining space. South 32, Woodside from the energy space, Fortescue, and of course Rio Tinto as well. The stock up about 0.5%. What are you taking out of the production results today to see the gain in the share price compared to yesterday's fall for BHP?
Yeah, look, I think it must always be measured against expectations. Rio Tinto, they're on track for about a 323 million tonne per annum rate. They had previously guided 330. Today, off the back of the latest production numbers, they've adjusted the range to say 325 to 330. I think some people are sceptical, particularly considering we're heading into cyclone season, which may have an impact on Port and Rail, which was the reason why they've changed that range guidance, at least today anyway. But I think overall the market had sort of expected this, knew it was coming, hence why today we're actually seeing a gain in the Rio Tinto share price.
I mean,
and to put it in context, 5 million over 330, it's a 1.5% differential. Not particularly significant, I would have thought.
I mean, it's hard to read into these production results too much, I guess, for these companies, particularly given the fact that we know the Aussie dollar and the prices of the commodities are having such an impact on results at the moment.
Yeah, there's far more moving parts than obviously the production numbers. So yes, I do think absolutely it's too much or you shouldn't read too much into these numbers. To compare and contrast, you look at Fortescue, who met guidance, reduced costs further, 5% over quarter, 20% over year, to $13.55 per wet metric tonne, have paid $700 million of debt in the last quarter as well. Really a seemingly exceptional production update, and the stock, when I was walking to the studio before I left, had not moved a cent. So always, you need to take it with a grain of salt, and of course measured against expectations.
Right,
so I think much of this was already known.
All right, Chris, appreciate your time. We'll have to leave it there.